Hi, everybody, and welcome. I'm Leslie with the New Mexico Small Business Development Center, and I'm pleased to introduce Vic Bernaclaw. He is a certified SCORE mentor, and he has a really neat series. It's part 1 and part 2. So this is part 2 of his series, and this one is going to be focusing on implementing your business plan, taking your plan and putting it into practice. So it's always interesting to hear about that. We're lucky enough to have Vic for the next couple of months. So it's good because if you can pick up either session at any time. And then if you have questions, go ahead and type them into the Q&A. I want to remind all New Mexico small businesses that the New Mexico Small Business Development Center strongly encourages everyone to learn about the risks to their cybersecurity. During the webinar, I'll chat over the link to our YouTube channel so you can watch our cybersecurity webinars. If you'll turn the next slide for me, Vic. This is going to be part of the handout that we will send to you. This is COVID-19 business resources. So don't worry about if you can't get all the links and stuff. We'll send it to you to just have information. Next slide. Today, again, like I said, this is Vic Bernaclaw, SCORE certified mentor. Presentation guidelines, please mute your audio. Make sure to set your Zoom ratio to fit Windows. You kind of see it better that way. Q&A, type your questions in or raise your hands and we'll be glad to answer those. Next slide. This is about more training and offerings that we have available, and we have a lot on the books. So we have just about anything that you possibly could want for your small business. We will send a post survey. So if you see something that you would like us to key on, let us know and we'll be glad to get it into the webinar series. Next slide. And again, implementing the lean Canvas business plan, turning your plan into action. So Vic, turning it over to you.
Thank you. Good afternoon, everybody. I've always wanted to know when somebody was talking to me, what kind of background or knowledge they're speaking from, or is it just an opinion or is it based on experience? And in my case, just my background, I have a bachelor's degree in mechanical engineering and an MBA, master's in business administration. I worked for the federal government, retired from the Department of Energy here in Albuquerque after managing several technical and administrative units out there, and retired as a senior executive. I then, we started with my wife and son, a couple of tech businesses. We got them up to about 30 employees and a couple million in sales and turned them over to our son, who's doing very well in managing and expanding those businesses. So I've been there, done that. I've worn out my kneecaps in front of bankers and in front of a lot of other people. So don't hesitate to ask questions as you're going along. Make sure you put those into the Q&A, and as we go along, if there's questions that need to be answered at that point in time, we'll jump on them. If not, we'll put them at the end, and we'll stay as long as necessary to answer all your questions on any of this material, either last week or this week. What we did is that we have to put the implementation of the plan into context. Specifically, last week, we ended up talking about this plan right here, the Lean Business Canvas. We walk through all 13 blocks. And so we have basically the operational aspect. So then the question on number 2 here is, what else do we need beyond that to make a successful business? Well, we need a specific administrative platform to take care of all of the things that are necessary to implement the business. So these are the things we're going to be talking about today, along with several others. But the first section, we're going to talk about business company name, what kind of organizational types that you have, the business administration for the operation, the financial planning and record keeping, taxes. And so let's talk about the name. If you don't have a name already for your company, it's fairly important to make sure that you end up with a name which fits basically your organization. There's a couple of ways of looking at this. One is there are advantages and disadvantages to having either a general or a descriptive name. So for example, you're familiar with lots of different kind of company names. So Amazon, Google, Xfinity, Etsy, what do those mean? If you had not known that they were associated with a company, Amazon is a river in, say, in South America, Google, who knows, or Xfinity. These are general type of names. The advantage is that that name is only associated with that company. It can never be confused with somebody else because they have branded that name in your mind. So if you pick a name, which is Umpty Dump, you will have the advantage of being the only Umpty Dump around. But the disadvantage is that it takes a tremendous amount of resources to brand that in your customer's mind. When they think of Umpty Dump, do they think of you? So that's the disadvantage. The descriptive could be things like Roto-Rooter, Master Charge, or the company we started, Home Security Systems. These are all very descriptive of what it is that you do. The problem is, that's the advantage, that when you mention the name, they know exactly what you do. The disadvantage is that it limits your expansion. So in our case, we started a company called Home Security Systems. But then the people we took care of their homes for security systems, they said, great, now come down to our office and do our office. Well, an office doesn't want to have a sticker on there that says home security. So we had to start a second company. So that was a disadvantage. We started a second company on industrial and commercial security system. Again, very descriptive, but limited. So if you had another alternative altogether of something entirely different, outer space security, we have to start a third company. So what I'm saying is there are advantages and disadvantages, but think about either a general or a descriptive name for your particular business. The other thing you want to do is make sure that nobody is using that business name. There are a lot of stories of companies here in town that had used a name without doing the research, and all of a sudden they had to completely change their signage, all of their advertising, the branding in the people's mind, because they had used a name that was being used in somewhere else. So you can check that out by going to the Secretary of State website, New Mexico Secretary of State, and going into the corporate area, and you can, by putting in your name and say, I want to look at the records of that company name. They say, we don't have any by that name. Then you know you're okay to go ahead and use that name. Organizational types. There's a lot of options for you. One of which is to go as a sole proprietor. Sole proprietor is the easiest and simplest way to do things. In fact, you don't have to even file any kind of papers. You just use your social security number as your identifier for your company, unless you have employees. If you have employees, then you're going to have to go get a EIN number, as employee identification number from the IRS. That's the advantages: simplicity, easy, quick. Disadvantage is your liability protection. If you open a business and somebody stumbles their toe in your store, or says that, hey, what I got from you caused me problems, and sues you, if the judge agrees, he can give it a judgment against you, not only against the company, but against you personally. So your house, your car, your 401k are all on the block for that judgment. So how do you avoid that liability protection issue? Well, first of all, you could get a partnership. A partnership is no more than just two or more people doing the very same thing as a sole proprietor. The problem with a partnership is that you are responsible for anything your partner does, because the two of you are co-owners in some fashion, whether it's 20/80 or 50/50 or whatever. And if your partner goes out and creates debts, you are personally responsible for the debts of that partner. Now, you can avoid some of that by going through a partnership agreement, talk to a lawyer, and try and get that set up if you're doing a partnership. If you're doing a partnership, make sure you have a partnership agreement signed and certified, notarized, that is, by the two parties. And in that partnership, make sure you identify who is going to be responsible for what, when, and under what conditions. That will help protect you a little bit. To truly avoid the liability issue, the first one up is this limited liability company. And I'm sure many of you heard of something called an LLC. The advantage of an LLC is that if you treat that company as a company, not as a extension of yourself, and because if they do something called piercing the corporate veil, in other words, if you mix your personal money with your business money, say you put your business money in your personal checking account, or you have a business checking account, but you decide you want to go to lunch, so you take $10 out for lunch or $20, and if the company needs money, I just take some money out. That's mixing your personal money with your business money. somebody sues you, even though you're an LLC, they can say, they can pierce the corporate veil by saying you and the company are one and the same. So make sure, and we're going to be talking about this later, that in an LLC, you really, really treat that company as a company, standalone, away from your personal expenses and personal income. Standalone, and then it can stand the forces of somebody suing you. They can only sue for the assets in the company. Subchapter S is the next option, and it has advantages and disadvantages. The advantages is that subchapter S has stock in it. It's composed of the amount of stock that you want to decide how many shares. What you want to do is make sure you have a very large number, million, 10 million, whatever. You can issue yourself some number of those shares. I'm issuing myself 100,000 shares, and the other 900,000 I'm leaving as treasury stock inside the company. You could turn around and sell those shares of that company, those 900,000 or whatever you want, based on evaluation of the company, which is another whole subject we won't treat here, but you can get help in evaluating your company, and then selling those shares and getting the money as opposed to borrowing the money. You can sell part of the company. And that way that allows you to get money into the company through the sale of shares. You still have the same liability protection that you had under the LLC if you treat it as a separate company. Also, under LLC, you do not have any annual reporting or fees to the state. You do under subchapter S. Under subchapter S, you have to file a report annually, and there's a small fee that's involved in that. Both the LLC, subchapter S, partnership, and sole proprietor can be taxed on your personal taxes. In other words, if you have any losses to begin with, that is, you took in less money than what you spent, you had a loss as opposed to a profit, that can be charged off against your personal income. So you've got some other income coming in. I'm picking a number. Say you got $30,000 of annual income and your business lost $1,000 in the first year. That could be taken off, so you only owe taxes on $29,000. Now, the other side of that coin is if the company makes a profit, it makes $1,000 profit, and that's added to your $30,000. So then you have to go ahead and pay on taxes on $31,000. So it depends on which way you want to go. You can on LLC and subchapter S be taxed as a corporation, in which case it's truly a standalone for tax purposes. That way, if you have a very low income from those companies, a lower tax rate than what your personal tax rate is, your total tax bill is going to be less. The problem with that is when you go to sell the company, then you're going to be double taxed. In other words, when you're taxing yourself as a corporation, the company is going to have to pay any capital gains tax on the sale of the company. And then whatever's left over will go to you as a tax, as the stockholder, and you get to pay the taxes the second time under your personal taxes. So remember, if you set up your taxes under a corporate basis, as opposed to a personal, under a corporate basis, you subject yourself to that double taxation if you sell the company. The last one is a C Corp. The C Corp is basically all of the big guys. I mean, this is the General Motors and the General Electrics of the world are all C corporations. Those are, and you're familiar with all the biggies. That's a whole different ball game. And I know of no one in our clientele that sets up themselves as a C Corp, but that exists. Most of the people we talk to end up being an LLC, a few as sole proprietor and a few as subchapter S. But there is advantages and disadvantages to each. Talk to your accountant for your particular situation, and you will be able to discern which makes the most sense for you. If you go subchapter S, we recommend you talk to a lawyer who can help you with that. The LLC, we're going to talk about that later in this presentation. Very easy to do, and you can set yourself up yourself. Okay, within New Mexico is a more simple kind of operation than other states. I talk to people who've come from California. Very, very difficult. We talked a little bit about making sure that your name is not being used by anybody else. You can appoint a registered agent, but we're going to talk about that. You can be your own registered agent, and people I know pretty much are all their own registered agents. Don't be confused by the wording. that you may think I have to have a registered agent. You have to file articles of organization. The articles of organization are in the application. So when you fill out the application from the state, you will be filing those articles of organization because that's part of the required application. In addition to that, you can have a prepared operating agreement. Operating agreement differs in the sense that, number one, it is optional. Number two, it tells you how you're going to run the corporation, or run the company, I should say, run the company. So for example, if it said, hey, in the event of my demise, I want the company to keep on going and be transferred totally to my wife or to my child or to my secret partner or whoever it is. So that in that operating agreement,
Hold on just a minute. We may have lost Vic. We'll give him just a second to see if he'll pop back on.
it tells how you're going to operate.
There he goes.
Okay, you're back now?
You are, Vic. Let's go ahead and turn off your camera. Maybe we can reserve some
Okay.
bandwidth or something.
Right.
Let's try that.
Okay, let me do that.
Okay.
Okay, let's see if I can get down to, oh, here it is. Here it is.
Okay, here you go.
Okay, I turned the camera off. Is that okay?
Yep, let's try that.
Still hear me? Okay, all right. Okay, we'll do that. To form an LLC in New Mexico, it's relatively simple. Oops, I gotta get myself going here. Screen sharing, okay. Okay, let's try this. Okay, I'm getting a freeze up on this end.
Okay, let's hold on just a minute, everybody.
Go ahead.
Okay, are you able to move your slides?
Yeah, let's try it again.
Okay.
Let's see.
There we go.
Now we got, okay. We have to have a formal LLC name, as I mentioned. The registered agent is you can be yourself. We talked about the articles of organization being the form itself that you fill out, and the operating agreement is how you're going to run your company. You have to have a name with the following the name. You can put LLC, LC, LL, L.C or LC dot. But make sure that whenever you use the company name, you use this LLC. The reason for that is that then there is no question that it is an LLC as opposed to a sole proprietorship. And it clarifies in the mind, should somebody sue you, then there's no question that you signed as the president of XXX LLC. Make sure that nobody else used the name. We talked about that by checking with the Secretary of State. Appointing a registered agent, in the process, when you fill out the application at the Secretary of State, it will require a registered agent. There is no reason why you can't just put yourself down, but what you do have to do is you have to have arrangements to accept any legal papers. That means you have to have a physical address. So you have whether if you want your home, you cannot use a PO box. You have to have a physical address. If you're saying, hey, I do not want to have anybody know my physical address, then you want to go get a registered agent and pay them so that they will act as your addressee for any legal papers. But the state says I have to have a physical address to send legal papers to, so you have to comply with that. Articles of organization, in terms of what you do for that, is to fill out the form with the LLC name, date, duration, whether it's a particular period of time. Otherwise, if it's a perpetual, you can leave it blank. The purpose, you can leave blank if it's general. Name and address of your registered agent, whether that's yourself. The email address and the phone number is optional so that they could contact you. The principal place of business, whether it's going to be your home if you're working out of your home, or whether it's a storefront or wherever, They'd like to have the principal place of business and the mailing address if it's going to be different. Whether you're going to have a manager or whether you're going to run the business, and whether you're the only member or whether you have multiple members. If you have multiple members, then you have to list them. You as an organizer, you've got to put your information in, and it has to be filed online. You can simply do it, and we're going to show you the address to get that. There is a $50 filing fee, so you have to be prepared to give them a credit card or have previously arranged with them to have them send a check ahead of time. The operating agreement, remember we said, was optional. It's not required, but advisable, and it says how I'm going to run the company. If you create it, you don't need to file it. You just keep that for yourself. But I would recommend that you have that notarized and available in the event of your demise, that somebody can find that so they know your wishes, as well as anybody that says, hey, how are you going to run the company? You've got a notation. Okay. To form the LLC, you go online to the Secretary of State's and follow. You can go on to this. And incidentally, you're going to get copies of these slides. You don't have to jot any of this down. So you'll have this information in email to you. From the business administration side of things, you have to do a number of things to make sure that you're legitimate. I mentioned earlier, have a business checking account. You could have this at a credit union, at a bank, but suggest that you have a checking account in the name of the company. But before you have the name of the company, you need to have your LLC, if you're going to go LLC route, or your subchapter S name, because you don't want to have a business account, then have to change it. Quick story. Second company I started out and I asked for commercial and industrial security systems. Went in, filed it, and they said, nope, you can't have it. I said, what do you mean? I said, well, there's a commercial industrial roofing. I said, well, I'm not a roofing. They said, yeah, but it's too close. So from commercial industrial, I said, well, change it to industrial and commercial. And they said, well, that's okay, because there's nobody like that. So they accepted the industrial and commercial. So if you get the name first for your LLC or subchapter S, then go get your checking account. And then a major point is make sure that every dollar that comes into the company goes through that checking account, and every dollar that goes out of the company goes out of that checking account. Then you have made sure that you have treated the company as a standalone, not something that's mixed with your personal income. In other words, they wouldn't be able to pierce the corporate veil. Suggestion is have a website. Website, why? So that the people who potentially buy from you know that who you are, what you do, and some of the information about you. You can get the website information. You can form your own, a one-pager, simple, on free software, things like Wix, W-I-X, and there are others that you can set up a website and do on your own. But the more complicated ones is going to cost you a little bit. You can do it on your own and pay for it, or you can pay somebody else to do that for you. But a website is very important if you're going to expand your business at all. Important things that like business cards, minor item, but if you don't have them, you don't look professional. You want to drop those off with people you talk to. A suggestion, not everybody uses this, but a potential, when you leave, they may pitch the business card, or they don't know what they got the business card, but they don't know you XXX company. And I can't remember what it was that they did. Easy to do is something called a trifold. It's just a single piece of paper folded in 3 pieces. And you can go to Microsoft Word, and they have templates that you can print out. Or you can go to a graphic artist and have them make it up. But it's something that tells what you do and all about the information for you. Insurance, there is both mandatory and optional insurances. The mandatory is associated with workman's comp. You have to have workman's comp if you have more than three or more employees. But if you're in construction, you have to have a workman's comp for even 1 employee. It's a form of insurance that you will pay for and through an insurance agent. So see your insurance agent for that if it looks like you're going to have workman's comp. The rate is based on your experience factor In other words, how many people get injured. To begin with, you'll pay the high rate, and then you'll get the experience factor of not having people claim, and it'll keep dropping for you. But it's not a really expensive operation, but it's something that if you have 3 or more employees, you really legally need. The optional insurance, it could be things like liability insurance. When we got into business, we quickly got liability insurance in the event somebody sued us, or in the event we caused any harm, unintentionally or otherwise, where they could sue us. The liability insurance covered us. If you have a lot of equipment or material or property, you're probably going to have property insurance. Pricing is another whole entity under itself, but in a nutshell, there are several ways of pricing your product or service. Number one is a cost basis. It costs you $1 and you can sell it for $2. And the dollar, the 100% markup is what you're going to use toward your administrative costs and as well as your profit. Another way is to compare with what your competitors are doing. If the competitor, instead of charging $2, is only charging $1.75, you charge $2, you better have a reason to charge $2 when they're charging only $1.75. Because there people are going to say, well, why is yours more expensive? And if you have a reason, that's fine. If you don't, they're going to go to the $1.75 person. So compare your pricing with your competitors and see what they're charging. If you say, hey, I still need to charge $2 because I'm doing more, then that's fine. Tell your customers the reason it's $2 is because you're getting extra 25 cents of value doing the following things. Another way is to on the pricing is to use value provided. We found that out very quickly, that if you can show the value of your product is worth that price, they're willing to pay it. In other words, even though it's more expensive than somebody else's product, if in fact it has a lot more value and you can show that, they're going to be willing to pay that. That's why there you have a whole series of prices for cars. Lexus is not the price of a Metro. It's not the price of a small car. You have for different clientele. Some clientele feel like, hey, I have to pay a high price in order to get what I want. So if you can provide that value, you are going to be able to charge the higher price. The last one is whatever the market will bear. Oftentimes people price based on their need. For example, if you remember when the COVID masks were rarely available, people were going on the internet and selling them for very dearly. So it depends on what the market will bear is another alternative. The problem is people will remember you as taking advantage of them. And when the crisis is gone, they may not come back to you. So be careful about how you charge for that. License and permits, it depends upon your particular industry. If you're into construction, you're going to have to comply with the New Mexico Construction Industries Division. You can get everything from a handyman license all the way up to a contractor's license for the various areas. I hold a contractor's license for electrical. So it's difficult to get. You have to take an extensive test, and you have to have a lot of experience in the field before they'll give you a license. Handyman license is easy. So if you are in cosmetics or whatever you're into, just Google and check with the industry and the state and see if there is a license requirement for that particular area. Okay, taxes. You can be a sole proprietor and you don't have to worry about registering for taxes, except when I get down to the gross receipts tax, you do. But you don't have to as far as getting an EIN number. But EIN is a tax number from the IRS, Internal Revenue Service, and you can get that for free simply by going to irs.gov. So regardless of the formation of your company, if you have employees, you have to have an EIN number. If you're a sole proprietor, you do not have to have you do have to have an EIN. You can use your social security number. Beyond that, I recommend everybody just getting an EIN number right away, and then you've got it for the duration. The second thing you have to get is what used to be called a CRS number from the state. It's now called a BTIN, or a business tax identification number. And that you can get from tax.newmexico.gov free, and you're on your way. And those are registrations, and that identifies you with a tag, number tag for your particular business. There's payroll taxes, Social Security, Medicare, that you have to take either out of your own pay if you pay yourself as an employee, W-2 employee, or if you have employees. This amounts to like 15.3%. And if you have employees, you're going to pay half of that, and your employees are going to pay half. If you are the sole person, a solopreneur, you're going to pay both halves of that, 15.3%. And as a self-employed, as I mentioned, you pay both halves. Then you have federal and state unemployment taxes. This is a fund that's to cover those who become unemployed from your business. If you have 3 or more employees, you have to have it. It's the federal portion of this is very small. It's only 0.6% on the first $7,000. You can pay that annually. It's only $42 a year, but on the form 940. But the state unemployment taxes is much higher. It's based on your experience factor. Did you lay off a lot of people? Are they claiming unemployment? Because the unemployment is paid out of that particular fund. During the pandemic, the federal government has been contributing a good deal to the state to help out on that particular area because there were so many people unemployed. As a new employer, you pay the maximum until you generate the expense factor. And then the rate is determined by the industry that you're in based on the history of people being laid off. It could be as high as 5.4%. So talk to your accountant in terms of making sure how you take care of paying that. Your taxes on payments, your federal income tax, you'll pay that basically as a small business, probably on an annual basis. You'll wait till the end of the year. If you start making substantial money, the feds and the state both want to have their money in advance. So you'll have to pay quarterly. And you may already be paying quarterly estimated income taxes on your personal income. But on a business, if it's small, you can get away with the annual. If it's a larger amount, you're going to have to pay quarterly in advance. If you get to the end of the year for the state and you owe them more than $400, they're going to assess you with fines and penalties. So that's why they want their money as you generate, if you're generating a sizable amount of money. New Mexico gross receipts tax is a whole nother animal. The gross receipts tax is basically the state's name for a sales tax. And the sales tax is applied to every sale that you make, whether it's a product or a service. And the state could care less whether you collect it or not. They say, I want my money. So you will pay the gross receipts tax on any sales that you make, any money that you collect. So most people end up charging the customers for the added gross receipts tax, which varies by county and location and the state. When you get your BTIN number, they will give you a whole set of sheaf of papers that shows you which locality has which rates. And across the country, across the state, there is probably 2 pages in small print of different locations with different rates. And as of July 1st of this year, the state has mandated that you charge the gross receipts tax of the location that you deliver the service. So if you're a barber or a beautician, you deliver the service in one place, you charge the one rate. So for example, if it's in Albuquerque, you charge the Albuquerque rate to everybody. But if you are delivering a product and you delivered it on site or a service that you delivered on site, you're going to have to charge the gross tax rate of that particular location. And they've got all the forms. And when you get your BTIN number, they'll give you the information. And there is training for that particular area. And we'll talk a little bit about that. There's also property tax, and I think you're familiar with that, if you have property tax, you pay that twice a year, and it's a county assessed tax. And if you have business property, then you're going to have a property tax on that business property. The BTIN number that we talked about earlier is the identifier that collects in the remission of particularly the gross receipts tax, also used for income tax, but it's your identifier, it's your license plate in a sense for collection and remission to the state of the gross receipts tax. If you're in New Mexico and you're doing business in Mexico, you have to have a BTIN number because they want their gross receipts tax. As I mentioned, it's paid by the seller, even if it's not collected, but most people end up collecting. You can obtain the information at the tax.newmexico.gov. We get your BTIN number, and there is training available for that. They will provide, they'll give you information as to when they provide the training. The state provides training for that. They were doing it face-to-face, they're doing it on Zoom. And there's even a YouTube location that periodically they have a workshop on YouTube. The federal EIN number is what you get from the IRS, and it is basically your license plate with the feds, and they follow that for your income tax. And remember, you're as a LLC, sole proprietor, or a subchapter S, if you elect to, you can have that on your personal income tax. So all that information will go on to Schedule C, and then the Schedule C information is transferred to the front of your 1040 for your taxes. If you're one member and you don't have employees, you're okay. But if you have employees, you got to have an EIN. And you can get that by going to www.irs.gov. And there, obviously, there's no filing fee. Let's talk a little bit about accounting. Why do you need to have accounting in the first place? Well, it turns out you have to keep track of what's happening in the company. In other words, you wouldn't play a football game without having a scoreboard. You wouldn't just run up and down the field and score touchdowns without keeping track of what the score was. Well, same way in your company, you have to keep track. How do you keep track of this stuff? Well, they have what's called a chart of accounts. A chart of accounts is no more than just the boxes that you're going to be putting the numbers into. So you might just say one box is revenue. So all my money that comes in goes into one box. That's fine. When we were in business, we wanted to know how much money came in for certain kinds of equipment, whether it was alarm equipment, whether it's video equipment, whether it's card access. So we had a separate box for each of those so that we kept track of where that money was coming from in terms of what particular category. On the going outside, you'll have boxes. There's a standard set of boxes, obviously, for utilities, for insurance, for your internet, for your taxes, things of that sort. And that's the way you keep track. So what recommendation is when you set up your company, sit down with an accountant and create the chart of accounts that you want to have, because it's very, very difficult if you said, well, I forgot to add a box. It's tough when you mix a chocolate rebel cake after it's baked to try to separate out the chocolate. So do it ahead of time and decide what boxes you want, and then you can go ahead and have that to the point where you understand your business and how it's working. Revenue and expenses, money coming in, money going out. So just a straightforward kind of operation, and whatever is left over from revenue minus expenses is a profit. Or if the expenses are bigger than the revenue, it's obviously a loss. An analogy that you could think of here is kind of like a barrel of liquid. And that liquid is the money in the company. To begin with, you're going to put some money into the company, so you're going to put some liquid into that barrel. That as you pay bills, it's going to reduce that liquid level. As you get money in from revenue, sales, it boosts the level in the barrel. You never, never, never want to run out of money in that barrel, because if you do, the company is bankrupt and you're out of business. It turns out that like roughly 80% of the small businesses that start up are out of business within 5 years. And cash flow control is one of the major reasons. People spend more than what they take in, and the level goes down to where it runs out. And like blood in your system, if you have blood in your body, when you run out of blood, you're dead. Same way when a company runs out of cash, it's also dead. Be sure you can accept credit cards, because so much of the business nowadays is through credit cards. And there are various accounts that you can go to and get a business credit card. Remember now that you're going to have to pay a fee, 2-3% or more, for a credit card transaction to get credit cards. But the ability to have that cash immediately is very, very important. So as opposed to billing for a 30-day net, having the money coming in right away is very, very valuable for a business startup or a business that's expanding rapidly. So now let's take a look at the financial documents that you would have to use in your business. So here is a simple, what's called an income statement, or it's also called a profit and loss. You can see the upper box here is called revenue. Then you got expenses, operating profit. So you take revenue minus expenses is equal to operating profit. These are additional costs outside of the operations area to come down to net profit, net income. So, and remember, a income statement is covered over a period of time. So it's this is over a period of years. Years could be over a period of a year, could be a period of a month, months, whatever. It's just over a period of time. So it shows money in, money out, and what's left over. Your balance sheet, you've heard of that. A balance sheet is no more than a snapshot of your financial situation. Assets is how much you own. Liabilities, over on the right-hand side, is how much you owe. And the shareholder's equity is the difference between assets minus liability is equal to your equity. So to begin with, you're going to put some money into the company. I'm just picking, say you put $1,000 into the company to start the company. It's going to show here as a shareholder equity, and it's going to show up here as $1,000 in cash. If you said, okay, now I got to spend $100 of that to buy inventory. Well, then $100 is going to show up here in the inventory section, and the cash is going to go down by 100. But always the assets is going to always equal the liabilities plus equity. So this 472 here equals the 472. So that's why they call it a balance sheet. Assets equal liability plus equity. That's a balance sheet. Okay. One of the ways of really using your accounting in a fashion which you can manage your company with is basically through a process called budgeting. You can project what your income statement or your P&L is. You put down, hey, I think here's the kind of money I'm going to come get in, and here's the money that's going to go out. I know I've got a telephone bill to pay for. I know I got rent to pay for. I know I've got inventory to buy. So what you do is you put down all these projected costs and the projected income. And typically a startup company ends up not getting as much money in revenue as goes out. So you end up with losses at the bottom of that process of this projection. So you remember, you got to project all your costs that I mentioned, and you'll find out whether you're at a profit or loss. And then you say, well, how much money am I going to have to take care of all of those losses? So we're going to talk next about how do you figure out how much money you have to have in hand before you start your business. So let's take a look at a form to determine that. Here's a very simple income statement that just shows that in the first month, 0 revenue. But hey, I've got all of these other costs involved of labor, et cetera, utilities, phone, insurance, et cetera, for a total of $130. So my loss in the first month was $130. So I have to make sure I have $130, right? The second month, I'm saying, well, I got $100 coming in, but my expenses are $160. So I lost between the 100 and 160. I'm in the hole another 60. So the 130 from being in the hole plus 60, I now make sure that if I'm going to run 2 months, I have to have $190. The third month, I got $200 coming in, and my total expenses are 180. So, hey, wait a minute, I got a profit of 20 bucks. So my 190 that I had to have goes down to 170. So I know that the maximum I needed in this particular situation is I had to have $190 to get started with. And if I didn't have that, I'm not going to make it. In April, I got 200 coming in, only 180 going out. So I got another 20. So that brings my 190. Bottom line is over here in June, I make 400 coming in and only 250 going out. So there's 150 toward what I had in the hole. So I show here, not a loss as across here, I show a profit. So what they call this is break even. It's when the money coming in is equal to the money going out. So in this particular case, simple case, I had to have $190 or I shouldn't even start the business. Now remember, I had a son-in-law that started a business and I said, typically you end up overestimating your revenue by double and you underestimate your expenses by double. And he says, you not exactly, but he says, you're pretty close. So this thing here, 190, if that was true, you would end up with substantially higher amount. So you can do this for yourself, do this budgeting and figure out how much I'm going to have to get started. Because if I don't have that money to get started and I can't get it quickly, then don't start the company because you're going to start partway down that track and run out of cash, like running out of blood, you're going to die. So where am I going to get this money? Well, typically, the companies that get started, startup companies, end up getting the majority of their money from savings, friends, and family. Inc. magazine, which is a magazine for small businesses, INC Inc., had a survey of the 500 fastest growing small businesses in the country. And they asked the CEOs, where did you get your money to get started? And by far, the majority of them said savings, friends, and family. They didn't get it from the bank. They didn't get it from investors. They got it from savings, friends, and family. Now, if you say, well, wait a minute, I don't have that and I still want to get started, there are other options. Let me familiarize you with those. One's crowdfunding. And you've heard of crowdfunding and say, ooh, that's a neat way to get money. Well, let me tell you just a little bit about crowdfunding. There's 3 types of crowdfunding: reward crowdfunding, debt crowdfunding, and equity. With rewards crowdfunding, you raise your money by reaching out to supporters who receive, you give them perhaps a small gift or a product sample, and they pledge a certain amount of money because they believe in what you're doing. This is particularly applicable to places that are socially oriented. They say, I'm a supporter of that, and I'm going to give you money to get started in that. If you're a profit-making organization, it's less likely, but you might have a sample that you can give them of your product that they would say, that's pretty neat. I'm going to give you some money and I'll get a sample. So there's nothing wrong with that. The debt crowdfunding is basically getting a loan from people and paying it back over a specific period of time. Some people like this because it's a little bit faster than a bank loan. And remember, banks are not interested in startups, period. Now, if you have a lot of collateral, you got a house that you want to refinance or a car or whatever, collateral, they will loan you the money on that collateral. And then it's up to you to do whatever way you want if you want to put it in a business or whatever. But it's not against a business assets, it's against your personal assets. But you can do crowdfunding as a loan and pay it back over time. Or the third one is equity. Much more complicated, but currently authorized. You can sell shares in your company on crowdfunding, and there's just an awful lot of requirements to do that. You do it through a intermediary. Things like Kickstarter, Indiegogo, FundMe are 3 different organizations that will help you do that. And they do that for a fee and perhaps a percentage of what you collect. And there are also, be careful, take a look at all or nothing sites. Many of these require that if you set a target, say I've got a target, I want to raise $100,000. If you don't get to that 100,000 and you've only raised 90,000, you have to turn around and go through the process of giving that all back. You still have to pay the Kickstarters, et cetera, their fee, but you got to give that all back because you didn't hit your particular target. A lot of people felt like crowdfunding was just a real easy thing to do, but it turns out I've talked to people who've said that you can figure on as much as a couple of people full time for a few months. Why? Because not only do you have to set this all up, you have to go out and find your own investors, people that are interested in giving that money through websites, through other mechanisms. So it's not an easy way to get money, but it is available. You could sell equity. You can go to your cousin Susie and say, hey, how would you like 10% of this company? And I'm going to sell it to you, just whatever it is, it's $1,000. And so you could sell shares of the company and get money to get started through equity if they believe in you. And but then you treat them as a stockholder. It's not a gimme. And you have to have stockholder meetings, stockholder reports, etc., things of that sort. And you're also giving away part of your ownership. So what you want to do is try to retain at least 51%, because otherwise, if they're on the board of directors and you have 40%, they say, you're not doing a very good job. And even though you started the company, they can fire you legitimately, because they say, I'm bringing in somebody that can really run it. So even though you started it, you're out. So make sure you keep 51% of the ownership under any conditions. You can get loans, but not through the banks. You can find people to try to loan you the money, what's called private equity. And if you are doing a technical organization, technical product, you can get this through venture capitalists or through other people. A group called Angels is another one that can provide you money, but they're primarily involved in technical organizations that can grow very fast. Okay, let's talk about putting this all together. The way to do this is to set up a schedule of the necessary steps. So typically what you want to do is do this chronologically. So it says, okay, the first step I got to do is I got to go get my LLC. Step 2, I got to go get my EIN. So you're creating a list of items. So create a list chronologically of the things that you want to do using the technique of who, what, who's responsible for what, by when, at what cost. And you have to constantly update that. The way to do that is to just pick out an Excel spreadsheet and put down this information, and you can keep track as you're going along. The reason for writing it down is if you don't write it down, you'll get lost and you'll forget some of the stuff, and it'll be very important things. So make sure that you put it down: who, what, when, where, how, why. Okay, let's talk about a summary since we're getting to the end of the period. You have to, first of all, as we talked about under the business model canvas, you have to understand your customer problems. If you satisfy your customer problems and you provide value, you're on your way. That's the key. As I mentioned before, what's the problem and what is your solution for that problem? If you can provide that solution at a price they're willing to pay, you're on your way, and you can get all of this other stuff done as well. You got to deliver more value than what they pay for. They're going to keep coming back. All you want to do is get an increasing number of overjoyed customers. When you have that, you are going to be in business and very, very successful. Without an increasing number of customers, you're going to be flat. And as your expenses go up, it's going to cut into your profits. Specifically, you have to have the passion and the commitment. Remember when we talked about the business model canvas, block number 13 was, why are you in business? And if you have a very strong why, then you will be able to withstand any bumps in the road. You got to find that product or service that they'll pay for. You have to have, you can do this with action plans, the very steps, the who, what, when, and where that I mentioned. And you have to persist. There's going to be a lot of bumps in the road. And if you say, oh, this is not worthwhile, you just close down your business. But if you persist, you can hang in there and you can make it work. We did that. Our businesses have been running for like over 40 years right now. And you got to deliver on all promises. If you don't, the word gets around that says, hey, this outfit promises, and just never comes across. Keep those customers happy, keep them coming, and they'll keep you profitable. You got to comply with the legal requirements, because if you try to shortcut a lot of the stuff, you may be able to get away with it in a short run, but in the long run, it could be very costly, both fines, interest, etc. Whether this is taxes, whether this is the insurance or anything like that. Then you have to decide, am I going to start the company? Because the whole thing starts with actually doing it. Now, one of the things you'll find is that there is a thing called timing. You have to be able to get the needs of the customer correctly. This company called IDEO does a lot of work with corporations, and they did a test in terms of whether it was money, good leadership, whatever, and they found out that the biggest item was good timing. So if you are, if you have made COVID masks ahead of time, you are great on timing. Or if you happen to be able to go to restaurants and say, let me talk to you about how you can start setting up a carryout business, when COVID hit. Timing is everything. Sure, you have the right capital. Startup is a big thing we talked about. If it's growth, don't worry about it. If you're growing and you show profitability and you show a track record, the banks are going to say, fine, come on, we'll talk to you. Way to avoid any problems, make sure you get your counselors, SBDC, SCORE, or other places to help you with it. A lot of those people have been there, done that. They've gone through the same things you're going through, and they can tell you about it. The big thing is you have to be willing to do it. Let me tell you a quick story. If there were 5 frogs on a log and 3 of them decided to jump in the pond, how many are left on the log? Well, the logical thing would say, well, 5 minus 3, there's 2 left. Actually, there's still 5 left because 3 decided, but they didn't actually do it. You not only have to decide, but you have to actually do it. So I'm open for questions. We got a few minutes here. And while you're thinking about the questions, if you have any questions, jot them down in the Q&A and we'll stay as long as necessary. But in the meantime, here are some of the partners from SBA, SCORE, West, Women's Business Center, and Veterans Business Outreach Center. You'll get this particular view graph. There's contact information. If you're a veteran, be sure you contact VBOC. If, women as well as men now go to West. SCORE is available is for mentoring, and the good people at SBDC are always available for counseling, and you want to make sure you use them if at all possible. So do we have any questions from anybody here?
We do not have any questions right now. I do want to update everyone and that we have a whole series of different webinars for your small business. We have 3 steps to attracting and retaining customers. We have Help Wanted, how to attract and retain key employees, which I think would go hand in hand. We have Cash Management, Cash is King for your small business. Who's Stealing My Art Online, Online Plagiarism. We have E-commerce and alternative selling methods. We have Basic Steps to Starting a Business. We have Vic coming up next week on part 1. So it's good if you have questions, visit either one of his 2-part series. We have a bilingual session on accessing financial resources. And then we have, is a phone app right for you? So, wow, that is just next week. So they're all no cost. Sign up today. If you have any problems signing up, let me know and I'll be glad to help you. And we are almost out of time. So Vic, I want to thank you. Do you have any last words of wisdom before we pop off?
It's starting a business is extremely challenging. It's, you worry, you toss and turn at night, et cetera. But I can tell you, it's one of the most rewarding things I ever did in my life, because when you see happy customers and you provided income for other people, including yourself, it's really, really satisfying. It's climbing that mountain and getting to the top that's so gratifying. So if you're interested, jump in there and do it, because there's help to help you get up that mountain.
We do have a comment. Thank you so much. This was excellent. So I'm glad that we had you here today.
Great.
I want to, I'm going to have frogs running through my head all day today.
Well, if we went too fast for anybody, just remember in 2 weeks, come back and you can sit in the very same thing and try and digest it the second time around.
Absolutely. So with all that, you guys have a great rest of your week and we'll see you next time. Great. Bye, everybody.
Thank you so much. We'll see you, Leslie. Bye now.
Bye.